Peter Rose, Longwood Currency Trading. $4,000 loss. My first losing day of the year. And it was a good one. More on that later. It's a beautiful day. I had a couple of emails and folks have said, gee, we haven't seen you outside walking in the woods behind the house. So what's up with that? So let's take a walk out in the woods. Well, I wanted to come out on the way out and show you today's project. This is my domestic project for the weekend. Is painting the wood stove fireplace grate. It's old. It's probably 60, 70 years old. So getting a little rusty, so thought we'd add a little paint to it. I wish we could be that simple as we age. Just slap another coat of paint on and you're good to go for another 10 or 15 years. Hey, Bo, come on, let's go. Come. Bo is always interested in hearing the stories of trading. So $4,000 loss, yeah, big one. Actually, it was a $2,000 trading loss and $2,000 in carry interest charges. If you don't know what that is, it's when you trade currencies, you trade two pairs. One of them you're selling and the other one you're buying. One of them pays you interest and the other one charges you interest. And the spread between the two, or the difference between the two, is your carry interest. Sometimes you can earn interest and sometimes you have to pay it. Because I'm short, I had to pay the interest on this one. So, come on, Bo. Bo doesn't really want to walk around in the woods with me because Sue just left to go help a friend. Hey, come on. Just left to help a friend get ready for a craft fair they're going to be in. Come on, Bo, come on. Come on. Gotta walk the trail. So yeah, $4,000 loss. But I was trading with some size. And the issue here is that I was doing some staging initially. This was a carry trade over, let's see, it'd be 6 days, I guess. And so I went in, hey, come on. Sorry for the interruption, but the mailman is on the way and he hates the mail truck. And all he has to do is hear the mail truck coming and the Bo dog is gone. And we don't want him to get his ass run over in the road, because the people up here fly like banshees out of hell down these country roads in their beat 'em up, pick 'em up trucks. Oh, how about it? Come on. Come on. We'll get him in the woods and then he won't know any better and he'll just stay with me, maybe. Yeah, so I had opened the trade 5 or 6 days ago with a 3-lot, and it kind of went in my favor, and so I put another 2 on it, so I'm carrying 5 fulls, and then it goes against me. Okay, so then it swings around and it comes back, and my particular trading plan for this particular trade, there's differences in the way that I trade depending on the current price action momentum and the current volatility of price in general, and some other things that I look at as past price action to try to determine what the best strategy is. So in this instance, I waited until the thing came around. It was going in my favor. I was, I don't know, $300, $400, $500 up. What would that be? 5 times 50, 250? Yeah, probably about $400 up. So I waited a little bit. I was $600, $800 up, so I popped another lot, and it went way in my favor a little more. I popped 2 more lots in. I'm 7 now. It flipped around, went against me, turned around and started to come back. I popped 3 more, so I'm now 10. The sad story is that I was so convinced. I knew, well, I can't say that I know. You don't know anything, but I'm really good at determining where the currency pair should go. That doesn't mean it's going to get there, but I'm usually like a 95% right on what it should do, and ultimately it does that. It's just that when it does it, I don't know when it's going to do that, and I get in a lot of trouble, and I got a lot of trouble on this one because as it turned around and went against me, I'm carrying a 10 lot. So it turned around again and went in my favor, past the last point where I'd staged in. So I dropped 5 more lots on it, carrying 15 now. We're starting to get some weight. And it did this, and I was hoping to be in and out of this trade. I was just looking for a short profit target of about 10 or 15 pips. And so, no, actually it's more than that. I was looking for about 20 on this one. I had a clear shot to 40, and so I thought, well, I'm just going to load up the truck, because if it gets to 25 or 30, I'm going to be in great shape. So I'm 10 into this thing on a 15 lot, so I throw another 5 on it. I'm 20. Ultimately, I got up to 25 full lots. Great. The thing spun around, spiked in, I don't know, it was like 15 minutes. It was just way up, and I was like 10 grand down. And I thought, well, you know, I got a pretty good profit target. I'm 10 grand down. That's got to be pretty acceptable for the size of the position that I'm carrying. If I got out with the loss right now, I'd be fine. And then I went to 20 grand, and I went to 30 grand against me. And I'm going, when is this going to stop this nonsense? And these were spikes up. And I said what we all say: these types of spikes are not sustainable. A price has got to come around. When 50% of the people that are in the trade are on the wrong side of that trade, they're all going to cover about the same time. That's where you get these 50% retracements. So I thought, well, we'll get this 50% retracement, and I'm going to get out. So I didn't get that, and it went much further against me. So I said, okay, I'm just going to shut this sumbitch down and forget it. And if it takes me 2 weeks or 5 weeks or whatever it is, I'll reevaluate the entire situation in a couple of days and see what my profit target should be adjusted to, if I should just cut it and run, or whatever. So I'm looking at the situation a couple of days later, and it's still spiky. And I'm saying, this just can't keep on. It's just not, it's crazy. It's silly that it's gone this high and far against me. And so I'm holding. Okay, so how long are you going to hold on? Well, I got a big bank. I'm confident in my ultimate projections of where things are going to go, and so I got a lot of staying power. I got a lot of dry powder, and I'll just stay with it, because eventually when this thing turns around, I reset my profit target to $19,000. Now, it becomes a swing for the fence event. I still had more dry powder that I could have added to the trade on the way up, and then those would have brought the average up a little bit, but it wouldn't have brought it up substantially. I don't have infinite funds available. And so if I would have taken and added another 10 lots, say, I'm not going to change my current average price in relationship to where the current price is by that much. In fact, the probability is that it's not going to get there now and may continue to go against me, and so by using up all that other dry powder, I'd get margined out. I don't want that on a big account like this. So you got to play it somewhat smart. The smart thing to do would have got the shit out of the trade to start with, or not loading up quite so heavy in my position so early into its maturity. I was 12, 15 lots. I was 15 lots in, where my trading plan actually calls for me to only be about 8. So I'm way ahead of myself, and that's how I got myself into trouble. Because I was looking at a short day trade, a quick flip around for, say, 15 pips or whatever it was going to be, and I thought, you see the spike down volatility here is going to be great. And I'm going to pick up, say, 20 pips on this. I'm carrying 15 pips at 150 bucks a pip. So I'm going to make $5,000 on this. Well, now we're way out and underwater. I've got 25 fulls riding on this thing, and I reevaluate the situation and say, look, this negative movement, as far as I'm concerned for it to be, is going to probably continue for quite a bit more distance. It's just got the characteristics of that. When it's going to turn, I don't know. But when it does turn, the reversal should be dramatic. And so I set my profit target at about $19,000, which is not a whole lot of distance when you're carrying 25 fulls at $250 a pip. Because I don't play over leveraged positions. I may be in with too many lots, but none of them are over leveraged. I play $10,000 for every lot. Well, margin on this particular pair is about $6,000, $5,500. So say $6,000, that leaves me $4,000 or 400 pips per lot of runway. I can carry these things forever. And so, and sometimes I do. But it's only because on a win-to-loss ratio, I'm going to win these things more often than I'm going to lose them. I got to get the dog back. Bo, come here. All right, so I got the dog. We're going to reverse and go the other way. So if the mail truck comes, it's going to take him a long time. Well, not for him because he's like really quick, but it'll take him a while to get down there, and I can yell at him and get him back. So there's the scenario that I am in. That's the analysis that I did on both ends of this, where I'm just sitting and waiting for the turn to come. When the turn came, it went, and I was way out. I was way out of the money. I was too far out of the money. And it came back and made, let's see, about a 70 pip drop in just like instant. And the next day, dropped like that in an instant. So now I'm only down about $10,000 or $15,000. So I'm thinking, I feel pretty good about this. And then the other day, it was down to 1,500 against me. And then it was 2,000 against me. Then it was 3,000 against me. Then it was 6,000 against me. Then it was 3,000 against me. You got to remember, I'm carrying 25 fulls at $250 a pip. So every 4 pips is $1,000. Phew! Talk bad, Jack. So stuff is flushing all around. And it's a Friday, and I'm going, man, I just don't want to sit with this thing through the weekend, because we're at a kind of technical, if you want to call it, a resistance level. Hey, Bo! Bo! Come here. So I thought, geez, we're going into the weekend. I think the sell-off that we're seeing is people closing their positions out because they don't want to be exposed over the weekend. And so at some point, that's going to stagger because everybody's got done what they got to do. And then over the weekend, the banks are going to regroup. The big institutional traders are going to regroup. And it could be that Monday morning, it goes back up 60 or 80 or 100 pips. At $250 a pip, I don't want to be there. So I'm watching this thing. I'm trying to get make $1,000 on the trade. I don't know how much the carry interest is. I'm suspecting it's around 1,500. So right now I'm saying, geez, if I could break even on this thing at $1,000 or $1,500, which I wouldn't have because the carry interest was 2,000, but I didn't know that at the time. I'll just get out. And it went 1,500 at 3,000, 2,000, 1,500 at 3,000, 3,800, back to 3,000, down to 28, back to 3. Boom! I'm out. All of them. Screw this. At 2,000, because there was a lag in me deciding, okay, this isn't going to work. it goes to 3,000, it comes down, it was 1,800, and that's where I pulled the trigger at 18. I got everything out at 2,000 profit, underwater loss, 2,000 underwater loss. I look at the transaction log and my broker report, and there's another 2,000 bucks there in carry interest. How many times have I said that? And so I'm 4,000 bucks down. So it's only 1.8% or 1.6% against the entire risk that I had, so that's not bad. And at the 4,000 level, and as far as a trading loss goes, at 2,000 it was like 0.75% down on the trade itself. And so, because you got to judge your trading against your trading money and not against the friggin' carry interest. Generally, for the folks that are doing carry interest, they're adding that to their bottom line and all that stuff. And over the long run, they're in trades that are running long. They're doing positive carry and not negative carry, because all you got to do is find a pair that's got the opposite of the carry if you want to go short, and so you can make money on it. And I don't do that. It's just I'm not concerned about the carry, because 9.9 times out of 10 I'm a day trader, and that's where I like to be, because I feel it's much safer that way to take my short loss and get out. I've got a good win-to-loss ratio, and so therefore I know that I'm going to more than be able to make up for that on the next trade, or the one after that, or the one after that. And I've done the math, and even a 60-40 trader doing what I'm doing and staging and stuff, you can make money. And I happen to be more around the 70-30 range of it. So I have a high level of confidence that I can make the money back. It's just how much time do I want to take after I take a loss, as to how much time do I want to take to make that money back. So if I'm making, say, an average of $800 a day or $1,500 a day, then what is my risk? I want to go, you do 10 trades, and 7 of them are going to be winners and 3 of them are going to be losers. You minimize the losers, you maximize those winners. So in maybe a $3,000 or $4,000 loss, you can make that back in 3 or 4 days, or 3 or 4 trading days, right? Because the win to loss is not on a day basis, it's on a per transaction basis, right? So you can trade 10 times a day, and then you'll have your 70-30 odds that will generally come out. And that's the reason this is my first loss of the year, a daily loss, because I've lost before in trading during the day, but I've made more than I've lost. So I've always had a positive day. This is the first day that I've had a closing day loss, and it was I think it's 1.6% against me. So now if you take the 1.6% and divide that by the number of trades over the year that I've done, that per trade loss basis is just really, really small. So I got nothing to whine about. The only thing I'm whining about is I got caught holding on to this thing, where what I should have done, because I was loaded up, well, first of all, I shouldn't have loaded up that heavy. And second of all, when the thing started to peel out against me, I don't know how far it's going to peel out against me, so just get out, get out. No, I sit there and I sip my coffee and I think the fucking thing is going to come back. You just can't do that. I can't do that. I don't care what you do, but I can't do that. I shouldn't do that. But that's one of the problems that I'm faced with from my 40 years as a real estate investor, is that you manage your risk totally differently than we need to manage it in currency trading. It isn't a matter of what you do, it's a matter of when you go about to execute certain things. So your rules have to be built around that, and those rules have to override your emotional craziness. And if they don't, you end up doing stupid shit like I do about once every 3 months. I'll go, oh, I think I know what I'm doing here. That's the way that goes. So that's my tale about the $4,000 loss, the first trading day loss of the year. My wife and I went out to dinner last night to a nice Italian restaurant, had a couple of glasses of wine, and celebrated, and took a picture of that event, and so we'll show you that in this video here. And thank you for watching. thank you for those of you who have subscribed to the channel and comment on it. I really appreciate that that community of folks that's emailing me. The whole point is to try to help folks as much as I can so that they can take their 4 or low 5-figure account size and become consistently profitable with that, so that they'll have the confidence then to trade larger numbers and shoot for that 6-figure account, knowing that they've got the techniques and the emotional control to handle that rationally, so that they can more than replace your day job income. I mean, if you got a 6-figure account, you're doing really well. I mean, if you can't do 20 or 30% a year just as a 60-40 trader, and then you get better at it, you go to 70-30, or some folks I know, they're 80-85% on the win side. And you can just really rack up the money if you know what you're doing in order to do that. And so from a percentage-wise against your risk that you're taking, it's really mind-boggling the type of money that it's possible to make. And I've already done that this year. I mean, I've made more money this year than probably, I don't know, 80% of the W-2 workers. That's not to brag. That's just showing the power of learning the rules of the game. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day. Now I gotta find the dog. Oh!